Today we're going to look at Chapter 8 in our text of internal auditing, risk of fraud and illegal acts. Now, I'm certain you've had in your undergrad and graduate courses several case studies, because I know that this is used by probably Dr. Stebbin, maybe others, Dr. Burkett. And I know I use some of those in my MBA accounting class, because the risk of fraud is such a big deal. It's worth noting various fraud cases in the past that has resulted in legislation and a new awareness. The one everyone remembers is Enron from 2000, 2001. The special purpose entities, Sharon Watson, I believe her name, or Sherry Watson, whistleblower there. Of what was going on between Arthur Anderson, Big Five accounting firm at the time. That's why there's four now. Big Five accounting firm that was in collusion with Enron. Probably a lot of that just were in so far, didn't know when to get out. It's a slippery slope there, but it destroyed their company. But there was others. I mean, WorldCom, the go-go 90s with what the stock market did and the build out coming up on Y2K. A lot of pressure there for auditors to give their stamp of approval on financials. But WorldCom is another one, booking really recognizing unrealized revenue. I guess I should, yeah. Or realizing unrecognized revenue. They hadn't actually earned the revenue and they were booking it. I remember one of the phrases that WorldCom used was corporate unallocated revenue, which is usually a red flag that we'll talk about here in this chapter, of telling you something's not quite right. Because any revenue that's booked should have supporting documentation. It shouldn't be some corporate unallocated, but that's what was going on in the early 2000s with WorldCom and Bernie Evers and the prison time that they had to serve. But it's not just on the revenue side as much as most of the fraud goes on with the revenue side of booking things. But the expense side, I remember waste management, a case study there. What waste management was doing was at least two things. One of them was carrying impaired land on their books at cost. And in reality, obviously waste management, what do? They pick up people's trash and deposit in a landfill. Well, those landfills aren't worth what they were in most cases, unless they've been reconditioned somehow and used for something else. But who builds anything on top of a landfill? Maybe a golf course is about the only thing you could build on it. I remember playing a golf course out in California one time on top of a landfill. But otherwise, the land was impaired, and you know from intermediate accounting that when land is impaired, it needs to be written down to fair market value if the future cash flows are less than the book value of the asset. So it needs to be written down to fair value. Well, waste management didn't do that. And the other part of it was with waste management, they were extending the useful life of their assets. They're saying, well, it's not really 10 years. We think it's 12 years, or if it's not 12, it's 15. I mean, another red flag. Like, why would you want to extend the life of an asset on your books? That's because you want to decrease expenses, right? You want to lower your depreciation for the remainder life. And that's one of those changes that you make in the year that you change the useful life and in future years. I guess they call that prospective changes, right? Not retrospective. So these fraudulent cases, and that's just a couple of them, is rampant. Doesn't happen as much anymore. Guess we'll find out sometime if there's others that are next stock market debacle of what's going on. Anyway, that's what Chapter 8 that we're going to look at today here. And I'm going to skip a lot of this because, again, a lot of this is just reading so far. You know, they got some interesting statistics. They're on page 8-4. It says the most common fraud schemes were asset misappropriation, which occurred in 87% of all cases, resulting in a median loss of $120,000. This is a study that was done back 2012. It looks like what's written here. It says financial statement fraud, which is made up of just 8% of the cases in the study, was the most costly category with a median loss of $250,000. And so that's when someone's just cooking the books to make things look better than they really are, like what Enron did and WorldCom and Waste Management. Maybe people didn't directly benefit from that. They benefited indirectly with increase in stock price. Obviously, their stock options were more valuable. So, but not misappropriating of assets where somebody's stealing cash, equipment, inventory, that type of thing, which is 87% was related to misappropriation of assets. You look on page 8-5, talk about occupational frauds, often committed by individuals working in one of 6 departments: accounting, operations, sales, executive upper management, customer service, and purchasing. They cover most of them, don't they? They don't cover engineering or HR, but I can see where things like that can occur in just about any organizational department. Now, obviously, the higher up it goes, the more it is. Now, one of the issues, occupational fraud, that I was concerned about was within engineering and the maintenance group. They're spending a lot of money on parts, capital projects, and so forth, relationships with vendors. Very easy for them to use a certain supplier or vendor that they become a little too cozy with. And obviously the customers or the suppliers or vendors are smart enough to know, well, they'll just give them a kickback through mailing it to their home address or otherwise. And that went on with BVUB. If you read what I gave you last time on that link, of course, so you get 3 quotes on everything, but danger there is if you got somebody you want to do business with, you can always find 2 more that are going to have a higher price. So sometimes you have to step in and be cognizant that are those 3 the best price and quality as well. But occupational fraud, look at that next blurb there, third one down on page 8-5, says 67% were first-time offenders with clean employment histories. 84% have never been punished or terminated by an employer or fraud-related conduct. And some of this, people think it's just the way you do business. But we'll get to this thing called the fraud triangle here in a minute, because people will justify just about anything why they're due taking something that from the company. They don't look at that as stealing, like cheating on your income tax. It says the fraud perpetrators usually display behavioral traits, serve as indicators of possible illegal behavior. I think sometimes us accountants, we need to do a minor in psychology, don't we? It says perpetrators living beyond their apparent means, experiencing financial difficulties. Those 2 are 36 and 27%. Close association with vendors or customers. That happens a lot. Excessive control issues. So that's the majority of the behavioral traits that you look for in people. And you should always be a skeptic. That's people say, well, you shouldn't be negative. There's a big difference between being negative and being skeptical. Being skeptical means you should question everything and have controls in place that people aren't tempted to steal. There's a lot of definitions of fraud. Bottom of the page 8-5 says fraud is any intentional act or omission designed to deceive others, resulting in the victim suffering a loss and or the perpetrator achieving a gain. All of it's on page 8-6, 8-7. You can read that for yourself, and brings us to 8-9 in the fraud triangle. I went over a lot of this in my MBA accounting class, because you got a lot of people in there, probably 80% are going to be non-financial managers. They need to be aware of it. But this fraud triangle, defined there by Creasy, maybe is the way you pronounce his name, means, motives, and opportunity. Bottom page 810 says rationalization, opportunity, and need. I mean, think about it. If you've got the opportunity to steal, because you've been working in it, you know the procedures, the process, you've been there long enough, you know all the ins and outs. At the transaction level, which we talked about last time with the IT part, transactional level, if you got the opportunity, what's your motivation? You need the money. Maybe you got a drug habit that has to be fed. Maybe greedy, wanting more. And then what's the rationalization? They don't pay me enough. I mean, I've seen fraud in my church twice. Once was probably 35 to 40 years ago. I was really young, wasn't really involved in church affairs at the time. The guy that was a treasurer had taken money out of an account, I think like $15,000, and moved it into his account. He said, well, I was going to move it back, but there's obviously more to the story than that. I don't know what it was, but anyway, he obviously resigned and actually left the church. And then another time, 30 years ago, almost 30 years, 1991, 92, an issue there, the treasurer had stolen $35,000 and it was gone because the church was having financial issues at the time. And this particular treasurer was passing bad checks. That's back when they used to put stuff like that in the newspaper, right? Police reports and stuff like that. Passing bad checks. He was not being paid to be the treasurer. I mean, I don't know what went through his mind. I'm sure he probably thought, well, other people are being paid to do less important jobs, right? Which accounting is important. And unfortunately, they tend to be the ones that don't get paid what they should be. And he just had too much. There was no segregation of functions, lack of a better term. And he was able to make the deposit, record the deposit, write the checks, do the bank reconciliation, read between the lines. And he took out just enough so the church stayed above being illiquid. And it came to a head when the senior minister, tried to cash his check. That's back in the old days when people would get a check, tried to cash his check, and it bounced, even though the statement said there was money in it. And then, of course, they looked into it and found out what happened. But that happens a lot. I don't think it's just unique to my situation. I've heard stories of over $1 million being stolen from churches, especially in capital projects or just day-to-day routine things that go on where someone has too much power, unchecked power, and there's no segregation of functions. Nobody's watching what someone does. Very simple. People think fraud is some elaborate scheme. It is not. Not even Enron's was elaborate. They just had a lot of special purpose entities that weren't on the books, and it was allowed. And revenue recognition, expense recognition, things aren't that complicated. They just go unchecked. But people justify, that's what the fraud triangle is. And you should always ask yourself things like this. An internal audit, external audit, you ask yourself that as a controller or someone working in a business. Always be looking to circumvent fraud with preventive fraud, right? Or preventive controls. Of course, detective controls as well. We learned about a couple chapters ago. It goes into the principles there of fraud risk governance. In fact, there's 5 principles. They're listed on the top of page 812. Key principles for managing fraud risk. Not the least of which is this principle 5 talks about the whistleblower hotline. Now, we implemented that at Exide back in 2003 or so after Sarbanes-Oxley in 2002. That was just pretty much standard operating procedure. Have a fraud line posted that if people see something they think is fraudulent, to call that number. Now, it tends to turn into a gripe line of things like, well, so-and-so got to work overtime 2 weekends in a row and I didn't get to. I mean, they would get fraud calls like that, which need to be investigated. but then sometimes it could be the tip of the iceberg or something big. No, nothing ever came up at our facility, but nonetheless, there's issues that come up. One of them, it was a significant, well, I don't say significant, it was an issue that needed to be addressed, was hourly employees are supposed to be paid for more than 40 hours in a week. And certain individuals like lead employees, lead workers that are hourly, but they're kind of in between a regular operator and a supervisor being salaried, not subject to the overtime laws. But anyone who is a non-exempt salaried or hourly employee, same thing, they're eligible for overtime over 40 hours a week. Well, they were being forced to clock out and then work on paperwork for their supervisor. Well, that's not right. And he or she was doing that just to cut down on the amount of pay going out, but that's illegal. And this particular person had contacted not the 800 number, they contacted the local Department of Labor office, I think here in Johnson City. Of course, they came out and did an audit, and we were fine, wasn't a lot. Had to give back pay to the individual based on what they thought they were, because remember, they didn't clock in. They'd already clocked out, and based on their investigation, that had to be corrected. So that's sort of somewhat related to this. It's not following procedures that they should be following, which is fraudulent. But nobody's gaining from that except the companies not paying as much overtime out. But those whistleblower hotlines are really important. Continue on through this. Let's jump over to page 8-18, this fraud guide. Brainstorming fraud risk scenarios. You should always be thinking about what could someone potentially do that's fraudulent. Incentives, pressures, opportunities in that fraud triangle, what potentially could happen. Risk of management's override of controls. We looked at that with BVUB last week. I mean, how many times were they probably overriding their internal control? Because I'm sure the audit that was being performed there every year, because I know the firm, local firm, excellent firm, does a good job. They probably, the people they talked to, they had good internal control narratives, and people probably say, yeah, we're following this, but in reality, they weren't in many cases. And how many times were those controls being overridden by someone all the way up at the top, at even the board level, even beyond the CEO? Of course, fraudulent financial reporting there at the bottom, page 818, is always a concern of like what Enron, WorldCom, and Waste Management were doing. And that's where in the internal audit, trying to catch things like that, maybe consulting with external audit, because they're the ones doing the audit for the SEC for your report to be looked at by shareholders and investors and creditors. And then the misappropriation of assets. Think about the potential loss there. And the smaller the company, the more this is a big deal. I mean, what's the big deal of petty cash or something going out the door in a small company? It's not right, but it's a big deal for a small company and not as big a deal for a large company. But cash, inventory, is inventory being sold, materials, equipment. You know, for a long time when we would have tooling that would get replaced in our production line at Exide, a lot of stuff nobody kept up with the old parts that were taken off, like the old brass platens. Well, brass isn't cheap. Copper's the same way. We had these copper tips that were used, about the size of a nickel as far as circumference or radius, but they were about a ½ inch thick. Well, those things would wear down. Well, those brass tips, or excuse me, those copper tips were being, people were carrying them off in their pockets and then going and getting paid for them. I don't know how much that happened before we finally instituted a policy that whoever's putting the copper tips on, and they were put on there on a regular basis on the welder, it was a 1-for-1. You take the old one off, you put a new one on. And so the tool crib that had the spare parts made sure that there was a 1-to-1. Same thing with brass platens, huge, weighed a lot. I mean, a lot of those were just walking out the door, night shift or whenever, and were never returned. That's part of, may not be significant, It's not going to impact being a material weakness, but it is a weakness. There is a finding, something you need to work on to improve. And that has to do with inventory, materials, and equipment. I talked last time or time before about audits of or physical inventories of your fixed assets. Usually it's not things being stolen when it comes to large pieces of equipment, it's the smaller ones that you're concerned about. And your laptops, anything that's small like that. But if somebody wants to steal, they probably can. You don't have a foolproof method. Corruption. What about the Foreign Corrupt Practices Act? It's over on page 823. Bribery of foreign officials, things that you do you think really aren't bribes, but in reality they are. You know, at Exide and Lear both, that was a big deal of going through training every year to make you aware of the potential of what happens when you're dealing with a foreign government. You think, well, if their government allows it, then it's okay. Well, it's not. Not all governments are like the United States, because we're a pretty honest group of people relative to what you see overseas. I know some of you find that hard to believe, but that's a fact. And we'll talk about that here in a couple pages. And then other fraud risks. What about conflicts of interest? Are you doing business with someone who is an owner or has an interest in a company? Are you buying parts from? And that happens. You'd be surprised how often that happens, that you don't even know it until, because I speak from experience of doing business with someone that you didn't know, someone high up in the organization had an interest in that particular company. So are there conflicts of interest? Theft of competitors, trade secrets, environmental violations. And so now if I skip over there to page 822 and 823, this Foreign Corrupt Practices Act, we used to go through about an hour training module, which we'd have to take a test every year because that's a big deal. Paying intermediaries with a vague business purpose or no tangible work performed. That's a bribe. Large cash payments. And you can read all of that there on page 823. You have to really be careful what you're doing with in violation of the FCPA. It says it's passed in 1977, but really only in 2007 did it become a big deal. That's about the time when we started doing that annual training that was required of people in positions like I was in. Bottom page 822 says the fraud guide states one key to prevention is making personnel throughout the organization aware of the fraud risk management program, including the types of fraud and misconduct that may occur. Give people examples, like being taken out to lunch. You know, they have a $25 de minimis saying, well, if somebody takes your lunch, no big deal. And that's usually the corporate policy, and that's what you use. But I tell you, some people will sell their soul for a $20 lunch or $10 lunch. So you have to be careful there about people who are in buying positions in your maintenance and repair, like maintenance, engineering, distribution. I found out after the fact that a local trucking company that's being used to jockey trailers back and forth in our distribution, which was a lot of work. He was giving cash bonuses to, as he called it, cash, or as I was told by someone else, cash bonuses to people who worked on the docks who were hiring him to do that. Now, he may have been the best price or best cost for that. I don't know, but I didn't know about that until after the actual facility shut down. But that's not right, that somebody's giving bonuses to people. Our policy was always, if we have a vendor supplier who wants to give us free stuff, like at Christmas time, country ham, cash, whatever it is, voluntarily, we ain't asking for it. If they voluntarily give that to us, that should be given away in some random fashion to all employees, all 800 to 1,000, not just those. But that doesn't always work, and you're not always aware of what's going on. But that's so key. Look at bottom page 823, the ounce of prevention. There it is. thought I made that up. The ounce of prevention, part of the familiar phrase, represents an organization's proactive way of fighting fraud. Ounce of prevention is worth a pound of cure, which is 16 ounces. Spend a penny up front or $1 up front to save $16 down the road is what it's saying. Doing background investigations on fraud. It's not always feasible, but if you're able to, you should. If you're small enough, like a church, nonprofit, you really just about got to, especially if you got somebody who's doing more than their fair share of the workload. Anti-fraud training. What kind of red flags to look for? What about compensation programs? Are you encouraging the right behavior with your incentives that you have? Or are you encouraging people to cheat, potentially? Exit interviews, excellent way to find out maybe what's going on. Usually when somebody's leaving, they want to rat everybody out, talk about how bad things are to HR. A lot of that maybe you ignore, but some of it may point you in a direction of internal audits you need to investigate. Of course, there's a right and a wrong way to do that. Authority limits, prohibiting wire transfers up to a certain level. Beyond, have to have more than 2 signatures, same way with signing checks. Approving purchase orders, we've talked about that. Fraud detection, again, whistleblower hotlines, they talk a lot about that. Process controls, reconciliations, independent reviews, fiscal inspections and counts, right? You know how important that is for inventory and assets in general. Then fraud investigation, corrective action. So here, if you receive an allegation, what do you do with it? Well, they list what you should do on 827. Confirming the validity of the allegation. What's the severity? Is it something major or is it rather minor? And you can read down through there. Evaluate the allegation. What's the protocol of this? Who's going to do it? Who's going to lead the investigation? Any special skills? Who needs to be notified? That needs to all be in your document, your charter, what internal audit is doing and your objectives. And then finally there, 8-29, understanding fraudsters, understanding why people cheat. Again, a lot of this is redundant. Top of page 830, if somebody's living a lifestyle that you think, well, how in the world are they doing that? They're making $30,000 a year as a clerk. They have financial problems. Personal debts, are they suffer from depression? Gambling, it's a big deal. Online sports betting now, huge. Casinos coming to Bristol. It's going to be a rise in the number of people that have gambling issues. I mean, all you hear is the positive about it, but there's a lot of negative on stuff like that. So pay attention. Of course, that gambling leads to what? Depression, but people get desperate. Having an unusual propensity to spend money. That applies to a lot of people. But keep your eyes open and watch what's going on in your organization. As I've said before, and they don't really talk about it here in internal audit, be out on that production floor. Watch what's going on. You with accounting knowledge, there's nobody there more qualified to watch what's going on and see how that impacts the financials. Watch what's going on. Understand the systems approach. Very important. And then finally in 830, they list some of these standards, sort of boilerplate stuff you probably need to read and understand. And the last thing I'll say about this chapter is on page 8-33, over there in the border. What's it say there? Professional skepticism. Nothing wrong with being a skeptic. It's the best trait you can have in audit. Absolutely. You've got to be a skeptic. The state of mind in which internal auditors take nothing for granted. They continuously question what they hear and see and critically assess audit evidence. But that applies to everyone who's in the accounting function. You're the fiduciary, you have the fiduciary responsibility. So pay attention and ask questions, learn the processes inside and out, learn the IT side. So that is chapter 8. Hope you have a good week, and we'll look at chapter 9 next.